I remember once when I was hitchhiking coast to coast in America, it strikes me that there's one thing in common between bankers and hitchhikers that are advisable, it would seem, looking out at this audience, and that is to be clean-shaven helps when you're standing on the side of the road. I want to start by giving Simon the opportunity to give us a up-to-date sort of macro overview of where this side of the China, or the New Silk Road, as it is now phrased, is, and the health of that macro overview 3 or so years after the very obvious global crisis and the one we had here. So Simon, if you wouldn't mind giving us an overview of this region at the moment.
Sure. I sat in the warm embrace of the sumptuous Armani Hotel. It's difficult to remember perhaps just what the last 3 or 4 years have held for us. If you remember, we had that somewhat ill-managed boom that ran through to 2008. It went brutally bust in 2008. 2009, 2010 were very difficult years of recovery, years of working through the excesses of the phase that had gone before. 2011 was dominated by domestic political risk. In 2012, well, we're still dealing with the legacy of the Arab Spring as far as the perceptions of international investors are concerned. We have the instability, geopolitical concerns in the rest of the Gulf, and a very difficult global environment as well. So really the last 4 years, Sean, I think have been tough. They've certainly been much tougher than we expected if you think back to 2007, 2008. What I'd say, though, is that we need to keep that very much in perspective and not lose track of the scale of the economic transformation that's taking place here in MENA, and particularly here in the GCC. This year, I think MENA GDP is worth $2.6, $2.7 trillion. That means MENA as a region will equate with the UK. Certainly it will exceed the GDP of France. The GCC will produce something like $1.5, $1.6 trillion in economic output this year. That's an all-time record. It will generate per capita GDP 20, 30% in excess of that you see in much of the OECD region. You want to keep that in some kind of perspective. GCC GDP will have quadrupled over the last decade, a fourfold increase in this region's wealth in the last 10 years alone. As I say, in real terms, the last 3 or 4 years have been harsh, but do not lose sight of the scale of that transformation, and also don't lose sight of what's been driving it. It comes back very much to what David's been describing for us this morning. Again, we've lost track of it, but 10 years ago, oil was worth $20, $25 a barrel in a really, really good year. It's now worth $125 a barrel in a normal year, even in a year where the US and Western Europe is flirting with recession. That's an enormous transfer of wealth into our part of the world, and with it, I think, a complete fundamental shift in the economic potential that this region has to offer. I think that's partly about Silk Road. I think that the links that David was describing do amount to a rejuvenation of that old Silk Road connection, but I'd argue it actually goes beyond that, and it's about a deeper shift in the way in which the entire global economy is structured. For the last 50 years, the world has belonged to the West. It's belonged to Western Europe and the United States in particular. That era is done. Growth for the next decade, the next generation, and I suspect some way beyond, isn't coming from the West, it's coming from the East. The period of a Western-dominated world is done. The consumption, the production, and ultimately the ownership of resources is heading east. And here in the region, we are especially well placed, I would argue, to benefit from that. What we're seeing right now is what it's doing to demand for our energy goods, our energy services, and the wealth that it's bringing to us. The challenge, I think, for the next 5 years, 10 years, and more is to turn that wealth into actual prosperity and to begin to deepen those economic connections beyond oil into something that feeds into the heart of our real domestic economies.
Thank you. I want to just take this metaphor of the New Silk Road, David. It's obviously a bit like the BRICS. It sort of came out as a very fashionable, has emerged to be a very fashionable term, and the BRICS have kind of grown into the term rather than it being there at the beginning. The term was thrown into the world. My suspicion is that it's the same with the New Silk Road. We're not quite at that bridge connection across the Asian to the Middle East, the East-East bridge. What's your own sense of where it's at and what it needs to progress in order to be a real road in a tangible way that maybe it was historically?
I think some of it comes back, in fact, to what Simon was alluding to in terms that this is not just an East-East thing. This is something that's going on in the emerging markets globally. I do a fair amount of work with an accounting firm. I can't name them because this is an HSBC day. But we have determined after lots and lots of interviews with people that all the trade in the next 50 to 100 years is going to be South America, Africa, Asia, and the Middle East. And that the West is now going to have to take a back seat. What has happened between Asia and the Middle East in the last few years has actually been more of a reacquaintance, getting to know you again. If you go back 200 years, the links were extraordinarily strong. The ties were very strong. But if you talk about today, a lot of those ties were lost. It's not so many years ago, I suppose, when if you were flying from Asia to Europe, you would stop in the Middle East and then carry on. And then planes got bigger and bigger, and they just overflew the Middle East completely. So all of those previous linkages started to fall away. What we're seeing now is a regeneration, a rekindling of the interest. And alluding to some of the remarks that I was making, you need to get to know the people before you start doing the solid business once again. That is what is happening. That is what I think is going to continue to happen. But the more we get and the faster we get to know each other, the better it's going to be, and more trade will be done.
Simon, your thoughts on that? I mean, from a Middle East perspective, it's clear, obviously, I think everybody can see that China and the Asia opportunity, it's been pronounced for the last decade or more. From a Middle East perspective, what needs to change here? What needs to happen for us to build our share, our part of the New Silk Road and to be a productive member of it other than simply exporting energy?
I think that's a fair question. I think it comes back to ensuring that the full potential of this part of the world is realized. I think we are in the process of shifting the way in which our own economies are structured. Those structures that I think grew up in the 1970s have served their time. Now, the policymakers that I speak with are looking for opportunities to modernize, to open up their economies, to liberalize their economies as well. But structurally, we are entirely tied into that East story. We are entirely plugged into what's happening in Asia, and I think it's about ensuring that the businesses in our part of the world, particularly some of the larger names, some of those national champions, are able to go to Asia, not just China, but in that broader Asia dynamic, and look for the opportunities to deploy both their skills and also their capital in a way that will tie them more closely into those domestic economies.
David, you mentioned in your speech that there will be bumps on the road in China, and I don't know if now is one of them, but clearly there is an announced GDP slowdown in China. The government has said 7.5%. Other independent analysis put it a little higher. But what does it mean for us here if China is slowing down? I mean, it's happening this year. What does it mean for us here in the Middle East? Should we expect oil prices to decline with it? What are the consequences, do you think?
I always get slightly amused by these newspaper headlines which say, disaster, China's growth is only going to be 7.5%. Hello? I mean, most countries would kill to have 7.5% growth. This is not a disaster. I think the latest figures that have just come out from China suggest that the first quarter's growth was somewhere close to 9%.
But yes.
Yes, there is a slowdown, and you would expect there to be a slowdown given what is happening in the global economy. It has not, as far as I'm aware, diminished the amount of interest that people in China particularly, and I would have to add Korea to that more recently, having just been there and talked to them. They've got a huge amount of interest in doing business in this part of the world. Will what is happening in Asia have An impact on oil prices? No, I don't see that happening. That's a separate issue, I would say.
But each percentage point that declines in growth in China is a big chunk of copper, it's a big chunk of steel, it's a big chunk of a lot of commodities, isn't it?
Each whole percentage point, yes, but if you look at the figures, when they were saying, well, we're going to grow at sort of around about 8%, they've consistently grown at something like 10%. The figures are given conservatively. I don't see in the short to medium term that even if the economy slows, even if it gets down to 7.5%, I don't see it having a dramatic impact.
And clearly that's the desire. The desire by the government is to slow the economy down. I mean, it's stated.
Yes.
And to what purpose? Why would that be? I mean, and what is the significance of their attempts to build a domestic economy in relative to the opportunity for us here?
The domestic economy in China has for many years been very slow. Growth has been slow. The growth of the domestic economy will help in some ways to mitigate the lack of orders that have been coming out of the West, as will China's greater focus on intra-regional trade within Asia, but that's also going to extend across as far as the Middle East.
Simon, I just want to come back to where we are sitting here, and we talked about you mentioned the removal, we're sort of being extracted out of the Western economic framework, the Europe, the US, where I come from, you come from. Should this region now reformat its corporate architecture, like we say, that typically we've been an outpost of EMEA, the Europe, East, Middle East, Africa corporate structure, and now Dubai and the Gulf in particular, maybe other parts of the Middle East might be different, but here, should we be reconstructing our corporate architecture that has a greater Asian angle to it rather than being an outpost of London?
Just to go back, first of all, the point you made to David, if China does slow and oil's at 100, again, as just like growth slumps to 7.5%, seems like a strange headline. Oil slumps to 100 is also a rather strange headline. If you only have a 50-fold markup on your commodity rather than a 60-fold markup, you're still in pretty good shape.
Yeah.
In terms of the refocusing of the corporate architecture, I'm not sure if that's how things really work. I think they tend to be demand-led, and I think as it becomes apparent that the drivers of business growth are from Asia rather than from Europe, you will see the command and control shift eastwards as well. I think it evolves. I don't think it's something which is a matter of deliberate corporate decision. I think it will happen as the economy changes with it. And this is already taking place. And you look at growth in the last decade and look at where the majority of that growth came from. It's already coming from the east, not from the west. Over the next decade, it will be even more apparent. The West is indebted. The West is weighed down. The West is having to work through the excesses of the last generation, and the next generation belongs to Asia.
We might go to the floor for some questions in a minute, but I'd just like David to have the opportunity to answer that question as well, in the sense that if a company and a corporate architecture is looking westward still to its decision makers, is that passé, do you think?
What are you going to do? You're going to persuade them to come and put their head offices here instead?
Well, I mean...
Which has to be an option, of course.
Yeah, I mean, Dubai does facilitate, I think, by its emergence. My former employer now operates under a brand, Manasa, which sort of projects us into the new Silk Road, if you like, into India and South Asia. So I'm just... if your decision-making is still anchored in the old territories as... who was it that said old Europe? Former defense secretary. But anyway.
I think the ways in the West are fairly static. And if they think that they are a Western-driven company, they will probably stay in the West. But take as an example the Japanese companies of some years ago. The car manufacturers in Japan are basically headquartered out of Japan now. They've still got offices there. They still do some manufacturing there. But I think Honda USA is a very substantial company. Maybe it's a dual role that they have, with a head office perhaps in Japan, but another equally significant head office somewhere else. I see if the West could perhaps adopt that sort of thing, I see it as a good opportunity for them. It will stop them thinking the same way as they've done for very many years, and have decision-making made much closer to where the business is actually occurring. But I suspect for many it'll just be a bridge too far.
Can we go to the floor? We have microphones out and about. We have a question here on table number 2.
Good morning. I think you mentioned that there's an expectation that there will be a change in leadership in China over the next year. Does that signal a change in the direction for the country, you think, in either way? And more specifically, there's also been some well-publicized events recently involving some high-level Chinese officials. How important are these events, you think, related to those changes?
First things first, the change in political leadership will take place, and it will take place in the same orderly fashion, I'm sure, that these changes have always taken place. Whereas in a country like China, you will be fairly certain that you know who the leaders will be now for the next 10 years, which creates a huge amount of stability, which is not seen in many other countries. I don't think it will signify a change in direction. The odd things that you will notice is that the previous leadership in China has very often come with an engineering background. This new set of leaders are much more likely to have a very much more diverse set of backgrounds. They will be economists in there and people with other skills. But change of direction, no, not significant. It'll continue to evolve and grow. Political questions are often best left to the politicians to answer.
And to coffee breaks.
And to coffee breaks. But I tell you what I find very interesting about this latest thing that has blown up in China. It's been well publicized in the press. Some of it, I'm sure, accurate, and some of it, I'm sure, inaccurate. And I'm not in a position to judge. What I will say is this. 5 years ago, probably, if something like this had happened in China, it would have been swept under the carpet. Today, because they are so much more open today in what they are prepared to announce and how they are prepared to deal with things, it has become a matter of public knowledge, public issue, and I think that is a healthy sign. So things go wrong at the top of almost every country you care to name. Something's clearly gone wrong here, but it has come out into the open, and that's the healthy sign I see.
Do we have another question from the floor? If you do, just please raise your hand and I will go to you. David, clearly the political change is one of the structural changes China goes through every decade or so, and you make your own calculations accordingly. But what other sort of structural developments in China should people be eyes open about? People talk about the property bubble, the demographic, and so on. What would you point to on those that are notable?
Both of those, I have to say, by the way, I think are particularly important issues. The property bubble, they have very few ways in which they can deal with a property bubble other than setting out laws and rules and regulations, which they have done with the banks to a degree and said you cannot lend more than this, you cannot lend for more than one home, a whole series of measures to try to dampen down the property. The problem is that the demand is still there, and certainly in the major cities. So trying to do that effectively is quite hard to do. Demographics, definitely an issue for China. And it's been said more than once, and certainly wasn't originated by me, but to say that China may get old before it gets rich is something that is said by many people. And that is something that they will have to deal with, particularly when there is currently there's no real pension scheme, there's no real healthcare scheme. And those are things that will have to be dealt with in the future. What else is happening structurally within China is this continuing attempt to persuade people to do business away from the coastal cities and move inland, to do more things in the West. And people have been very skeptical about moving to the West for a variety of reasons: infrastructure, the ability to get goods to market quickly. But all these are issues that are being dealt with. And in fact, I know of one Middle Eastern business that has now been operating in China for a number of years. They operate 22 factories in China, all in the north. One of them, because of the product that they manufacture, one in Xinjiang province, which is next to where the cotton is grown, and two others in northern regions where they're employing a lot of people and very comfortable doing so, and gets benefit from actually having shifted away from these cities. So I think that's where people have to look now for the future. And you get a city like Chongqing with its all the surrounding area has a population of something approaching 34 million people. It's an awful lot of people.
So in order to still access the cheap labor model, you go to those places?
You would go to those places.
Simon, just to come back, your review of the region here, similar, we've heard Wasta and Guangxi coexisting. Housing bubbles sound familiar, as do demographic challenges. How have we come out of this crisis? Where do you see that demographic challenge now? We've kind of seen it emerge in the so-called Arab Spring, or the uprisings, as it's now also a word I was told this morning, for the developments of the region. But where are those two issues for our progress going forward?
It's very different to the demographics that China is dealing with. The population of China is aging. The population of Russia is already contracting. The population of the Middle East and North Africa doubles in the next 45 years or so. 60% of the population is under the age of 30. 40% of the population of Saudi Arabia is under the age of 15. It's an incredibly youthful demographic that, as I say, outside of sub-Saharan Africa really has no peer. And the challenge for policymakers here is to create an economic environment capable of delivering the public goods, the welfare, the infrastructure, the housing, the employment, the demographics of that kind require.
Are you seeing any change of course emerge that would give you confidence that is being dealt with?
So far, I think it's at an early stage, and I think one of the interesting questions in terms of the legacy of the uprisings, as you described them, of 2011 will be the response of policymakers, because there are two possible responses you can give. One is to say, goodness, we need to fundamentally address the way in which our economies operate, the way in which our labour market operates, the way in which our trade policy operates, the way in which our financial markets operate, and we need to shift this region from being a 5% story to being a 7 8% growth story. The other response is to say, goodness, that was a very difficult period. It means that we have to make things more like they were before. We have to spend more on subsidies, more on public sector wages to close ourselves off from the outside world to protect the status quo. And at the moment, I'm not sure which way policymakers are going to go.
How does Asia look to the uprisings there? How does China look from that distance to here? Is it a factor? Is it something they consider in coming this direction?
I think the initial there was initial concern in China, but as with all things, they look at things very carefully and make up their own minds and decide whether it's going to affect them or not. I think they've decided that this was a country-by-country issue because of issues that were arising and existing in those countries, and that therefore the opportunity for that to happen in China at the moment, anyway, is therefore not material to them. They will keep a very close eye on it. But how do they view it generally even now?
I mean, some would argue that the changes that's happened here in the last year or two and the changes that are still unfolding plays into China's benefit as they arrive in the region, a region that is kind of turning its back on the West.
I would subscribe to that view as well. I think it does. But China, and it has happened at an opportune time, because China is now beginning to look outside its borders, whereas all the business has been generated either domestically or it has been as a result of a directive to go and, for example, open a bank branch somewhere in particular, because that's where some Chinese business was. Now there is much more ability to move freely out of China, look for business opportunities, and here is a clear place for them to come.
Can we go to the floor? Have we got a question? Yeah, one in the middle here. Table number 11. Please, and if you wouldn't mind introducing yourself, thank you.
Ahmed Abdelal from HSBC. Simon, increasing the trading band of the yuan to 1%, what does this signal? And do you see this having an impact on the regional appetite in terms of using the RMB as a settlement currency?
I think it's part of the broader modernization and liberalization of China's entire domestic economy, but I think it's also part of the internationalization, ultimate internationalization of the renminbi and the emergence of the redback as a not near-term but an eventual competitor for the greenback. You know, as the structure of the global economy changes, and it will happen progressively, but I think possibly more quickly than people appreciate, the role of the dollar will change, the role of the renminbi will change as well. And I think what you're seeing with the liberalization of the exchange rate and some of the other reforms that are taking place to internationalize the currency is the start of the emergence of the Chinese currency as a genuinely global currency, not just initially for trade, but ultimately for capital markets as well.
Would you think that in time, if that does evolve, that our peg to the dollar becomes redundant?
Well, our peg to the dollar is going nowhere now, this year, next year, and I suspect some way beyond our currency stay pegged to the dollar. But ultimately, you have to ask why our region, which is prosperous, has wealth, has low levels of debt, and will, with time, have a very strong demographic, a very strong economic dynamic, is allowing its monetary policy to be set by Washington.
It would seem possibly passé.
It was worse than that. It's actually terribly unhelpful. We need a monetary policy that reflects our own economic needs, not an economic policy set to deal with the challenges that the US economy faces. You know, for now it's okay because growth is relatively slow and inflation is relatively low as well. You go on 5 and 10 years and we still have interest rates in the US at 1-2%, but you've got growth here at 6 and 7%, inflation at 10%. You will ask yourself, goodness, why are we tied to the dollar? Why is Washington determining what interest rates should be in Riyadh?
And they seem to be increasingly having less and less impact on the oil price. I think we'll leave it there and give you the last word. Thank you, Simon. Thank you, David, for your insights on the New Silk Road, or the emerging New Silk Road. Thank you very much.
Thank you.